Howdy there, folks, and welcome into today's video. I got a very, very good video for you guys here today. I always feel like it's kind of my job to show you guys some stuff that I'm confident no one else is talking about, the stuff that I'm showing you here today, and getting into these things. And I think these are very important if you're trying to understand not just what I'm doing in the market and some of the things I'm going to show you in the video here today, but understanding kind of what's going on a much deeper level, from like a government level and so much deeper than that, on an investor psychology level, and all these things, okay, and how they all factor in. So hope you enjoy, hope you get a lot of value out of today's video, okay? I spent some time really thinking about this one here today. First thing I want to talk about is Internal Revenue Service, the IRS, right? These are the people that, you know, and I know not everybody that watches my channel is from the United States, but, you know, in your country, I'm sure you got somebody that, you know, takes part of your income. Or if you have investment gains, they take part of that money, right? They collect their tax revenue. Now, last year was a unbelievable year for the Internal Revenue Service. The IRS tore it up last year, for lack of a better term, okay? They tore it up. They collected a whole lot of money, okay? Not just from like wages and you know, people making money and things like that, but also from, think about all the investment gains last year. I mean, almost everybody had a lot of gains they took last year at some point in time, whether that be crypto, stocks, either some short-term gains, some long-term gains. You know, I can guarantee you they made a whole lot of money off of all that. I did a video at the end of 2021. It was called I Owe the IRS a Fortune. And I went through my fidelity statements and showed everybody, even in my private account, exactly how much I, you know, had booked in profits in 2021, my P&L, right? And, you know, that was $462,000 in my main private account. And then in the public account, it was another $118,000, right? So nonetheless, I had to pay a fortune in taxes last year, right? Like a lot of money. And just from like investment gains, right? And I'm sure a lot of you guys watching this video right now, you had to pay a lot of money to the IRS in terms of gains you probably took as well, right? Well, that was all fine and dandy last year, right? And we all had to pay, I paid 6 figures plus just in investment gain taxes, right? But here's the thing, Bitcoin, Ethereum, no one's going to have gains on those this year. We know that. I mean, those have dropped off a cliff, right? Stock gains, you think anybody's going to have stock gains this year? Give me a break. I'm going to have $0 the IRS is going to make off me this year when it comes to investment gains. Just no way possible. I sold one stock for a pretty good profit this year, but I'll easily offset that with you know, some tax loss harvesting at the end of the year. I got 1 million stocks I could pick from to do that with, essentially, okay? And so I'm going to end up paying $0 in taxes this year in 2022, right? So the IRS is not going to be able to collect any money from me. Now, I think that's going to be for almost everybody out there, other than maybe a few people that shorted the market, which is a very small percentage, and other than maybe a few people that maybe took some gains on some oil and gas stocks or something like that. Almost everybody else, right, is going to be taking losses this year. And, you know, maybe some little dividend income and things like that. But in terms of gains, like this isn't that sort of year because the market's been so bad. So this is a situation for the IRS. And never mind that. Think about all the people that have taken losses this year, right? All those people that have taken losses will be able to write those off on future years' gains. So which hurts the IRS in future years as well. So which puts the IRS in a real pickle. And no one's even talking about this right now, right? No one's talking about the fact that the IRS is going to make crap this upcoming year off of anybody's investment gains, because it just, there's no such thing as investment gains in 2022, okay? Just bottom line, right? All right, next factor I want to talk about is the psychology of the market and the state of the stock market right now. And I got a kind of a story I want to tell you guys. You know, I'm recording this actually on July 4th, 2022, but last year, July 4th of 2021, I was watching the fireworks with my kids and my wife and a couple friends. And we were watching it, you know, over the strip and whatnot. And we were, you know, off in the distance, but, you know, kind of like elevated so we could see all the, you know, the whole city fireworks going off and things like that. And then all of a sudden, like some, you know, teenagers or whatever, some kids are like, get in this parking lot kind of below us. And they start letting off all these fireworks, right? And I wasn't really thinking much of it. But then one went off, and all of a sudden, like my two friends were like, wow, what the heck? What just happened? And then all of a sudden my son that was standing next to me, he goes running off crying like crazy. And I'm like, what? I don't even know what's going on. It's dark out, obviously, but everybody got hit with something. I didn't get hit with anything. So my son goes running, sprinting across the street to the house. Essentially, is a little kid looking for his mom, right? And what happened was, I don't know if some rocks came out or something, but he had this big gash on his head, like this huge bump swelled up. My friends had got sliced up and whatnot. So I don't know what happened. I'm guessing one of the fireworks blew up, right? And so my son, he says, I hate fireworks. I never want to, do anything with fireworks again, even though we weren't even literally doing anything. It was something with the people below us, right? And, he was in that state, right? Well, just like kids, when adults go through a traumatic experience, they usually want to stay away from that. They never want to do it again, right? And so think about what has transpired with investors in the market, right? And this is whether we're talking the stock market, the crypto market. They are terrified right now. They have been absolutely sliced and diced. They've gone absolutely obliterated. And so a lot of people have left the market or are leaving the market in 22. Let's just be quite honest, because they have went through that traumatic experience that they don't want any piece of this, right? Shopify. Let's look at some of the biggest, most popular stocks in the entire stock market world, right? Shopify is down year to date. Okay, 6 months. This stock is down almost 77% for Shopify. Uber stock, one of the most famous companies in all the world, Uber, is down over 51% year to date. The stock has been overcut in half. So you put $100 in this stock at the beginning of the year, you have less than $50 now at this point in time. Amazon, one of the most famous companies in the entire world, and usually what people would think about as one of the safest stocks you could buy because it's flipping, flapjacking. It's Amazon. Come on, man. This stock is down almost 36% year to date. I mean, these losses are dramatic. Nvidia, one of the biggest companies in the world, one of the most well-run companies in the world, one of the most famous companies in the world, one of the most game-changing companies in the world. This stock has been overcut in half this year. It is down almost 52% year to date. PayPal stock, another one of the most famous companies in the world. The stock is down 63% year to date. Netflix, one of the other most famous companies in the world. This stock is down almost 70% year to date. And you go through these stocks, stock after stock. AMD has been slashed by over 50% this year. Tesla stock is getting pretty dang close to a 50% slash this year, right? Meta, 52%. I mean, does it get any more famous than Meta? I don't think there's a company I know there's not a company in the world that has more customers than Meta. Not a company in the world. And so you're talking about, this is literally the most famous company in the world between all the users they have on Facebook, WhatsApp, Instagram. And this stock has lost over half its value this year in a 6-month span. 53%, right? The only thing worse than that is if you've been buying VT the last 14 years, because, if you do the math on that and you've been averaging, throughout time, you actually lost money to inflation. That's just dramatically bad. Never mind that. Everything in the crypto space is a disaster, right? And so, and Bitcoin, Ethereum, all the smaller coins, you got crypto companies going under left and right, crypto hedge funds going under left and right. So as an investor, you're looking out at all this and you're like, this is all a scam. Like, the stock market's a scam, crypto's a scam, the whole thing's a scam because I put money in and I lose and I lose and I lose and it's down 40%, 50%, 60%, 70%. And so this is a year in which everybody's leaving the market, right? And they're frightened. And a lot of these folks will never return, or if they return, it's going to be a long time in the future, likely when the next time we're in a very euphoric market at all-time highs and everybody's feeling great or something like that. That's when people will return again. But this is going to be something that scars people for a long time. And unfortunately, unlike kids, right, my kid's already ready to go watch the fireworks again. Kids get over stuff fast. Adults don't. Adults remember stuff, and they don't want to go through the pain again. And so for an adult, they're going to stay away from something for years to go in the future. They're not returning anytime soon. That's just not the way it works with adults. Adults, they'll hold a grudge for like years against somebody, right? A kid, they get over stuff quick, man. 5 minutes later, they're already like past that situation. An adult will hold a grudge against somebody for, 10 years to go in the future. And in the stock market, in the crypto market, man, people are going to forget this. They're not going to forget the pain they've gone through and losing half their money, 70% of their money, 80% of their money. In a lot of these crypto brokerages, exchanges that have gone under in this situation, folks don't even know if they'll get money back. And it's just bankruptcies, all that stuff, right? And the thing I think folks got to understand, though, about the market, right, is we're in a very freak market right now. And this almost never happens, okay, where you get this big of a wall of worry all at one time. You have this is just some of the stuff I put up here. You have inflation, you have no stimulus money, and the Fed not helping the market at all, where they were doing all this bond buying program and then all the stimulus money and the stimulus checks and PPP loans and oh my gosh, okay, it was insane, right? Recession, you got a lot of recession fears. You got the Fed raising rates, the most aggressive they have in literally decades in terms of the, how big of an increase these are, right? You got obviously Russia, Ukraine. You got well, this was more of an issue going into the year, was valuations and kind of where companies were trading at. That's not really an issue anymore, but it was an issue. And then you have no confidence. You look at consumer confidence index, it's among the lowest we've ever seen. You look at the AAII investor sentiment, it's among the lowest we've ever seen, pretty dang close. And so there's no confidence from consumers out there. There's no confidence from investors. So we're going through definitely a wall of worry moment. But the thing we do know, right? Like sometimes I got to say, like, what would Buffett tell us in this situation? And Buffett says you got to buy when everybody's fearful. And everybody's fearful right now. That's factual. And the thing that people don't understand about you got to buy when everything's fearful, it's fearful for a good reason, right? No different than the great financial crisis. If you were buying stocks, you were one of the brave in that situation, right? Because damn, there was good reason to not buy stocks at that point in time. Sure, stocks were very, very cheap, but let's be honest. The entire financial system was crumbling. The housing market was getting absolutely decimated. Unemployment was sky high. It was through the roof. So everybody looked at that situation and they're like, why do I want to buy right now? Like maybe in a few years I'll buy, right? And so maybe people started getting back in the market in 2011, 2012, 2013, by that time, the market had already moved up like insane, right? So the fact, what we have going on this year, this rarely ever happens. And for everybody watching this right now, you got to remember this forever, because this big of a wall of worry almost never happens. But we have it going on in 2022. Now, don't tell anybody, but I'm still out there buying stocks. And why am I out there still buying stocks? And why do I have no plans to stop buying stocks this entire year, despite all the crash that's going on, all the scary stuff, all the worries and things like that, okay? So this is very important what I'm about to show you here. So basically recently, the NASDAQ has been down 30+%. As of like 2 weeks ago, the NASDAQ at the lows was down pretty dang close to 34% from the highs, okay? Now, the thing you got to understand about the NASDAQ is it's very common for the NASDAQ to make a 5%, 10%, 15%, maybe even a 20% move. However, it's very extremely rare, and I'm going to show you through data right now how many times the NASDAQ actually falls more than 30%. And what we're going to find throughout history is the NASDAQ very rarely has a year like it's had this year where the NASDAQ has fallen way more than 30%, right? This is very uncommon, okay? It is very uncommon. So if we go over the past 10 years, essentially, it's only been 2 times the NASDAQ has fallen over 30%. One of those times was in the Rona crash, and the other one of those times is right now. And that's the only 2 times in the past 10 years, from 2012 through 2022, okay? What about the previous 10 years? How many times did it happen? Well, in the previous 10 years, it happened twice as well, where the NASDAQ fell over 30%. It happened in the tech bubble, obviously, when the tech bubble dropped massively, the NASDAQ fell over 30% in that situation, right? And it happened in the great financial crisis. The NASDAQ fell over 30%. I think at the lows, it was down over 50%. Yeah, it was. It was like 55% or something like that at the lows from peak to trough on the NASDAQ. So twice in the previous 10 years, right? What about the previous 10 years before that? it dropped twice as well, 30% plus, right? And so basically what we can understand from this, right, is over a 10-year span, you should expect the NASDAQ to drop more than 30% twice, okay? Now, just basically in the past 2 years, or past 2.5 years, we've had two situations where the NASDAQ has fallen over 30% plus, in the Rona crash and in this situation. So I look out at the market and I say, we're going through a pretty uncommon phenomenon right now where the NASDAQ falls more than 30%. And I love a lot of companies that on valuations are trading at right now. I've got to go take advantage of that because this is very rare opportunities we get. And maybe this is the one time, right? Maybe this is the one time where the NASDAQ never comes back. And it's just down for all of eternity. I'm not going to bank my dough on a situation that has never transpired before. I'm going to bank my dough on what usually happens. And the fact is very, very rare for the NASDAQ to ever fall more than 30%. And every single time the NASDAQ ever falls more than 30%, it is very important that you be a buyer out there in that sort of market. And even with all the stuff to be scared of, which there's a lot, you have to be a buyer, man. You have to be a buyer. And if you aren't a buyer in that sort of market, you always live to regret it. You always say, gosh, man, what was I doing? Why was I not buying in that market? The NASDAQ was down 30%, 35%, 40%, right? And to not be a buyer, you just end up looking back with resentment and frustration that you weren't buying in that sort of market. So that's very, very important to understand. And so if anybody ever quizzes you on this in the future, you can tell them exactly what goes on, okay? Now, we're starting to see a little positive momentum in the AII investor sentiment. But I only call it a little bit. We still have a long way to go. This past week, the new numbers came out. 22.8% of investors are now bullish on the market, 30.5% are neutral, and almost 47% are bearish on the market. We have a long way to go. Let's be quite frank, okay? We still have over 2x more investors bearish on the market for the next 6 months than bullish, okay? Now, what I can promise you is these numbers won't stay like this forever, and they will flip, and then we'll end up flipping to more people bullish than bearish and things like that, right? But that's what we're going through right now. But the important thing to understand when you look at this is the tide can turn very, very quickly, right? If we go back to, think about where the market was a year ago and how bullish people were. Think about where the market was in November and how bullish folks were and how bullish the market was when the NASDAQ was well over 16,000 at that point, right? And the incredible amount of, positive momentum that was out there. And then fast forward 8 months down the road and less than 20% of people were bullish on the market, right? And so you got to understand in a 6-month span, in a 12-month span, everything can change in the stock market. You can go from an ultra bearish market to an ultra bullish market. You can go from an ultra bullish market to an ultra bearish market. It happens much more quickly than people even understand. And it's investor psychology, and it's a lot of recency bias. So if people see the market going down, they start feeling bad. They start looking at everything from a negative lens. They start thinking about only the negatives, right? They start maybe only watching negative videos. They start only looking at negative data and nothing positive. And if the market's going up day after day after day, week after week after week, month after month after month, they also get recency bias. And they start only looking at the positives, right? And all the good stuff going on. It's natural. It's what happens. It's humans. It's like human psychology. It's the way the brain's wired. If we continue to see something going bad, we're going to think this thing continues to go bad, right? If we see something that continues to go good, we're going to think this thing continues to go good. It's literally how our brains work, right? And it's how investors work. And despite all the fancy algorithms, and despite all the fancy charts, and all the fancy data, and all the fancy math, and all the folks on Wall Street with their, unbelievable IQs and, all their prestigious universities they went to and their master's degrees and all those things, right? And despite all that, at the end of the day, they're just a bunch of humans. And humans make human emotional decisions. And it's what happens time and time again. We see that throughout history. And that's why the most important thing, honestly, in the stock market is not IQ, it's gut. And it's understanding how humans work and understanding psychology on a very high level. because that's what's going to actually give you the most boost in this game. And understanding when the market's in euphoria mode, that's the time to cash up a little bit. And understanding when, there's a lot of deals out there, you've got to be a buyer into that market. And unfortunately, it's much harder, done than said, I guess you can say. And you can say these things, but some people are just like, no, man, there's so much to be scared of. And it's like, yeah, guess what? Every single time the NASDAQ ever fell 30+% before this, it was stuff that was scary. In the 2020 crash, we were talking about the economy closing for 3 years. We were talking about it was going to be the Great Depression. We're talking about, countless companies are going to go bankrupt. In the tech bubble, it was, those internet companies were just a fad. And the internet's just a fad, and it's not even going to be something, right? That obviously proved wrong. In the Great Financial Crisis, it was like, we thought we were going to lose the entire financial system. Every single time the NASDAQ falls over 30%, it's always a bunch of bad news. It's always a lot to be scared of. But that's just the way it is. That's just what you have to go through, right? Now, it's funny, I've been talking about this for a little bit about, there's a possibility I think the Fed could actually start cutting rates in 2023. And now guess what? Wall Street's actually starting to talk about this. And, there's actually analysts starting to predict that there's going to be interest rates cut in 2023, which was something that was thought of as impossible a while back. But I can tell you with how bad some of the economic numbers are getting now at this point in time, I definitely see us being in a situation where if the economy continues to deteriorate and if inflation continues to come down, right, unemployment starts to go up and up and up, the Fed's going to have no choice but at the end of this year or the beginning of 2023 to actually start cutting rates in that sort of environment, because they'll see unemployment start to go up. They'll start getting a lot of political pressure on that, plus pressure from obviously regular folks, right? And obviously, if there is a major recession, the Fed's going to be the one that's blamed in this whole situation. We know that, right? Because of how much money they pumped out there, and now they're taking it all away. Is the way people look at it, and that's just the situation. So for me, I stay focused on the long term, and I take advantage of deals out there in the market, guys. And that's what I love to do. And I look at all this stuff, and I look at historical data and what really happens and how these things play out. I actually made 2 courses absolutely free for you guys. If you want to take advantage of that, book a 15-minute call with somebody from my team. They'll ask you some questions and get you enrolled. We got a beginner course and we have a more advanced course, and those are absolutely free. You don't have to join my private stock group to get access to that, and they'll take care of you and get you in there. So I hope you enjoy that, and that will be pinned comment for a limited time. Much love and have a great day.